The Fed just announced another 0.25% rate cut. And this comes in the tail of a new election with Trump getting back in office. If you guys remember, Trump and Fed Chairman Powell have a little love-hate relationship. Sometimes they're making out, sometimes they're hating each other. There's been talk about Fed Chairman Powell being fired by Trump. These are things maybe that happens. I don't know if he gets fired necessarily. I don't think he can get fired. The question is, does he get pressured into leaving? Maybe so. I have no idea. But remember, guys, I voted for Trump. But what I do not agree with on Trump is his view on rates being cut more and more. Do I have a vested interest in higher rates? Yes, because I'm an investor. I want it to be harder out there to find good investments. As rates are higher, it's easier to find good investments, in my opinion, because prices drop significantly. Interest rates work as a gravity pull on asset prices. As rates go higher, asset prices will come lower. However, if you remember, we had interest rates at 0%. We jacked up rates to 5.5%, and home mortgages went from 3% to 7.5%. And guess what happened to home prices? They went like this because of another thing that's happening called inflation. And I talked about that early on. I said, guys, not necessarily a guarantee that home prices fall or stay stagnant. If you look back at 1975 to 1984, interest rates went up 50%, from 9% to 13.5%. But yet home prices almost tripled. Why? We just had massive inflation. So they just came out, they cut rates another 0.25%. For those of you who have cash sitting in bank accounts, you're just going to get a little bit less per year now than you did before. And that's something important to understand because, as you know, your investment criteria should be based on some sort of opportunity cost. And I always tell people, look at interest rates and think about what it means for other investments. Let's say hypothetically, rates went to 20% today. Would you accept a return of 8% on a stock? Of course not. You can go put it in a bank and give it to the government for 20%. That's how it works. That's why I believe we had such high levels of stock prices for so long, because we had rates at 0%. So people's thought process was, well, I can get a 2% dividend, so why don't I just do that? At least I'll get something and stocks can go up. I get it. Whether it's right or wrong is irrelevant. It turned out to be right based on the result that occurred over the last 5 years. Now, guys, if you like where this is going, you're new to this channel, this is our 24/7 channel. What this channel is geared towards doing is 3 or 4 videos a week where we react to economic news, stock news, earnings releases, things like that on a very quick basis. Rates were just dropped, and the only reason our video wasn't already out at 2:45 p.m. Eastern time is because I was dropping my wife off the airport. So we get action on these news stories as they happen, and that's something you're going to really love. We get these things. We have a crew back here who's all handling this. The second this video is done, it'll start getting edited, and it'll be posted within 30 minutes of me concluding this video. Now, what do Fed rates mean in the short run for stocks? Well, guys, interestingly enough, let's show you guys where stocks went in the last, since they announced the rate cut. I mean, it just dropped suddenly. Boom. Does that mean it's good or bad? I don't know. It was up today, down today, up today, down today, up today, down today. Stocks are random in the short run. But in the long run, what's going to happen to stock prices is going to be based on fundamentals as long as you pay a reasonable price today. And that's been my argument all along about stock prices. It's always going to be driven in the long run by value. And right now, I just think valuations are too high. Can it make sense still? Sure. It can still make sense, but the things that have to happen for it to make sense are probably less likely. Doesn't mean it won't happen, but probably less likely. And that's all we're doing here is we're making calculated bets on the future. We don't know what's going to happen in the future. We have no clue. But what we do know is if you buy a reasonably priced stock today relative to value, and the business gets 10 times better in the next 20 years, your stock price will probably go up around 10 times. That's just it. Now, what's the right price? Well, it depends on there's growth or no growth or a lot of growth or little growth. Whatever it is, those things can really affect the stock price. And that's what makes investing hard, is determining what the right growth rates are for the future. And that's what we're here trying to understand. I'm trying to teach that process here. We're not sitting here trying to teach you to buy X, Y, and Z stock, and that's it. We're trying to teach you how we think about investments. I like to stay in larger cap stocks. My returns are going to be lower because of that. We have people in the office who buy sub $500 million companies. They do much better than I do. That's the point. It all depends on what works for you. But I'll tell you, the people in the office, we all use the same process of thinking because it can be applied to everything out there. And the level of thinking I want you to have about interest rates is this. And this is very important. Does not matter. Now, if you're new to the channel, you're probably like, what the hell? This guy's an idiot. It doesn't matter. It absolutely does matter. No, it does not. Guys, in the history of this United States, we've had 18%, we've had 0%, and we had everything in between. Ironically, the best time to buy stocks was when it was 18%. But guess what the perception was at that time? And I'm willing to bet that I'll all wake up 10 or 20 years from now and think one of the worst times to buy stocks was when rates were 0%. But we'll see how that plays out. Why? Because when it's 18%, people feel all these gross things inside about the economy, stock market. And if I can get 18% from the government, why should I buy stocks? That's what drove stock prices and valuations down. From 1966 to 1982, stocks went nowhere. From 1982 to 2000, stocks exploded. From 2000 to 2009, stocks fell in half. And from 2009 until now, stocks have gone up almost 10 times, 8 or 9 times. That's incredible. That's an incredible, incredible, incredible feat. And you've got to remember that going forward. The question is that reasonable today? Well, stocks are selling for almost 40 times earnings in the last 10 years of earnings. Stocks are selling for record high stock market GDP valuations. At the end of the day, every investment, your return's going to be based on the price you pay. That's it. The lower you pay, the better return you'll be. The higher you pay, the more your return will be. So guys, what's going to happen at the next meeting? The next meeting is December 18th. This is the CME group. This is their bet. Right now, 67% of people are betting we're going to have another 0.25% cut. Because we're currently at 450 to 475. This would be a 0.25%. 0.5% think a half point cut. And 32% think rates are going to stay the same at the next meeting. Where do I fall? I hope I'll be one of the few people that sees it go to 6%. They're probably like, idiot Paul right here. Let's put idiot Paul. I'm selfish. I want interest rates much higher. You might sit there and say, oh my, yeah, I do. Because I think it's too easy for people to make money these days. And that's a problem long-term for investing. It's got to be harder. It takes that emotional stomach to be able to go handle the ups and downs of the market. But guess what? You're here learning because you're smarter than everybody else. That's a fact. Because most people out there don't even want to learn anything. Now, whether you agree with me or not doesn't matter. What matters is listening to what I say, assessing it, go listen to other things people say, assessing them, and things will start to rise to the top of what you believe. It'll probably be a combination of a lot of people. So all I ask is that you subscribe to the channel, hear what I have to say, comment below if you think I'm an idiot, comment below if you think I'm a genius. Doesn't matter either way. I'd love to hear the comments back. And guys, we'll see you here in the next few days, I'm sure, with another video. Thank you very much for your time.